So good afternoon and welcome to the final presentation from Red Cloud's 2021 Oktoberfest Fall Mining Showcase. I'm David Talbot, Managing Director and Head of Research for Red Cloud Securities. Our final presentation today is from Lake Resources. So I introduce Stu Crow, he's the chairman, and Steve Promnitz, Managing Director of the company. Lake Resources is advancing its Kachi lithium brine project towards production using its partner's direct lithium technology. So gentlemen, you have about 10 minutes and then we'll have a 5-minute Q&A session at the end. Attendees, please feel free to ask questions using the Q&A link. So take it away, guys.
Thank you so much, Dave, and thank you all of you for attending today. And it's great. Appreciate your interest in the sector. I'm going to share my presentation. Now, this presentation will be on our website in the next couple of hours because we'll be releasing it to the market. Essentially, what we do at Lake is fundamentally different to other participants. As Dave Talbot mentioned, we're using direct lithium extraction to produce a higher quality product. We've got our indicative project finance in place to deliver this project, aiming for 2024 for a cleaner lithium to power these electric vehicles. Now, I will be making forward-looking statements, so please read this disclaimer at your leisure. First of all, where are we located? The large lithium brine projects are in the Lithium Triangle. We're on the Argentine side of the border. Our flagship project, Kachi, is just down the road from Livent's operation. They've been there for the longest time, since 1997. And we have 3 other projects, Cauchari, Olaros, and Paso, which is adjacent to Lithium Americas and Orocobre, a large land holding 2,200 square kilometers. But what we do is fundamentally different. Yes, there are a number of large projects here, but we identified back in 2018 that the end user needs a consistent, high quality product, or should I say low impurities. This is to avoid battery performance issues, and this is going to be more of a theme going forward. We've seen the recall of the GM Chevy Bolt, and who knows exactly what those issues are, but they're down at the battery level. So high purity products are going to be a theme going forward, not just for lithium. And the only way to do that is to use a new technology. It's been shown now with other participants in the space that using the conventional method of evaporating the water, the brine, and then concentrating all the salts, that produces lithium. That's great. We need all of these projects. But if you can produce a high quality product on site, you capture that margin. We partnered with a group out of California called Lilac. They use a very well-known method of water treatment called ion exchange. They're supported by the tech sector. Now they're supported by the EV and battery space. We partnered with them back in 2018 and formally a few weeks ago to deliver this project. And in doing so, it delivers a significant ESG benefit. We're not talking greenwashing here. We're talking orders of magnitude difference in CO2 reduction, lower water usage, lower land usage. We're on a clear pathway to production. It's a large scalable project. We have indicative debt funding for 70% of the project. We've done pilot plant testing. We aim to have our definitive feasibility study, environmental social impact study, finished Q2 next year, aiming for financial close middle of next year into construction for production 2024. So how does this process work? Essentially, all we do is replace the evaporation ponds. That's it. And instead of the process taking months or years, this occurs in the space of 2 or 3 hours. Highly efficient, very fast, produces a high purity product. How does it do that? So instead of pumping your brine into a pond, evaporating all the water away, concentrating all the salts, and trying to separate out the lithium from that, what we do is just take the lithium out of the water. Because the lithium only constitutes 1% of the total brine, we can return virtually all of that back to its source. We strip those beads, create lithium chloride in a single step, and then just do it again. And so all we do is process water again and again, every 2 to 3 hours, 24/7, producing lithium chloride to put into the back end a traditional carbonate plant. High purity, because you just take the lithium out. Fast, we're talking hours instead of months or years. High recovery, 80 to 95% instead of 40 to 50%. Sustainable, cost competitive, scalable. The sheer footprint of this alone is amazing, the difference. Instead of evaporation ponds extending across the horizon for 20 or 30 square kilometers, we're talking something the size of a city block. Instead of all of that brine evaporating in the atmosphere in a hyper-arid environment, we return it back to its source. And all of these brine projects have a lower carbon footprint in comparison to hard rock projects. Not that there's anything fundamentally wrong with a hard rock project, but the spodumene needs to be roasted at 950 degrees to produce hydroxide. We have a low carbon footprint. And because we're going to be using solar hybrid power on site, a smaller footprint again. These are significant ESG benefits. This is what the EV space is looking for. This is what EV consumers are looking for. This is the way of the future. To that end, we've formally partnered with Lilac, and we've been working with them now for some years, but they will progressively earn into the project, and in doing so, demonstrate, particularly to the equity markets, that this process works, that it works at scale, that it delivers high quality, and that that high quality is actually runs through the stringent qualification standards of tier 1 battery makers, so that when we start production, it's already approved as a high quality battery product. Then they go and tip their 40-50 million US into the project alongside our equity. This basically says they're putting their money where their mouth is. Now, Lilac has significant support. The tech sector, EV battery makers. But the beauty is this is the first time we're seeing that tech money actually coming to the upstream end of the battery material supply. So we're aligning breakthrough climate technology with upstream ESG lithium production. To give you an idea of some of the backers of Lilac, the Bill Gates-led Breakthrough Energy Fund, MIT and their Engine Fund, Lowercase Capital, one of the most successful venture capital funds ever in Silicon Valley, invested early into Uber, Twitter, Instagram. They were into this, and now a new fund, Lower Carbon Capital, set up in August, one of their early investments, BMW, Sumitomo, SK. If you want third-party advocacy, that's it. The project itself is one thing to have a good technology, but you've got to have a large project that's scalable. Kachi is one of the top 10 lithium brine projects globally. Of the current resource, we don't even use 20% on 25 years of production at 25,000 tons per annum. We have the rigs back here at the moment, upgrading the resource so that we have a reserve, and we'll probably extend that as well. We control basically the whole basin here, and it provides a lot of flexibility. We're on a clear pathway into that production. Our pre-feasibility study released last year and upgraded early this year shows a very robust project at 25,000 tons per annum. Last year, that was about 8% of the market, but looking forward, 25,000 tons becomes incrementally smaller in the global demand. So due to the size of the demand and the support of project financing, we're actively moving forward with an expansion case to 51,000 tons per annum. Now that will make Lake Resources one of the top 5 lithium producers, and this is just from one of our projects. We've also demonstrated the product works very well in batteries, including nickel-rich batteries, and thanks to Novonix, based out of Nova Scotia in Canada, they've been doing battery testing for at least 15 years. They've demonstrated that this works well, which is a great adjunct to the conversations with off-takers. And the benefit of producing that high-quality product is you produce a high margin, and you capture that in the company instead of producing, say, an industrial-grade product, or half of it being industrial grade, like many of the traditional brine producers, and then having to get that reprocessed somewhere. There's nothing wrong with that, but you're handing that margin to somebody else in the supply chain instead of capturing it on this project. That's one of the key differentiators. And as we look through that at the economic metrics of the pre-feasibility study, on an NPV of this project at 1.6 billion, and a capex of 550 million, we've got an annual EBITDA of 260 million. So that EBITDA, that's half of our market value at the moment, just for 1 year's production. And as we look into the expansion study, we haven't released those numbers, but to give you an idea, that annual EBITDA line is well north of $500 million based on our assumptions. So we've got our market value just in 1 year's production. And one of the key reasons behind that is the support of debt financiers. We went out to export credit agencies, And we were able to secure the indicative support from the UK Export Finance, as well as Canada's EDC, to step up with 70% of the total finance required for this project, together with all of the insurance to bring this project into production. And not just providing that debt, but 10, 11-year debt, or should I say 8.5 years after commissioning. And 2/3 of that debt will probably go out the door at direct lending fixed interest rates under 2% interest, and the other third starting at a floating rate of 2% with a panel of banks. Now, that's pretty unusual for a company that's in development, and it makes that cash flow line very robust. So what are we doing at the moment? We're doing the bread and butter issues, finishing the definitive feasibility study, the environmental social impact. That's aiming for Q2 next year. And that'll trigger the finance of a demonstration on plant on site, probably the early part of next calendar year, financial close in the middle of the year, moving into construction, production in 2024, and probably an expansion soon after that. We're well capitalized at the moment, 26 million Aussie at the end of June, but at the end of August, that should be at least 60 million Aussie owing to options conversion. There's still plenty of value here in this market. Our nearest peer, Standard Lithium, which is about 9 months ahead of us, they were on the TSXV, now uplisted on the NYSE. They've got a market value in Aussie dollar terms over $2 billion, where in comparison, only 700 million, and we have a number of other projects as well. That's a Kalchari project, Olaros project. This is next to Gangfang Lithium Americas and Orocobre. We're going to be doing more drilling here over the Southern Hemisphere summer. So look out for some of that information. And essentially what we're doing is delivering a very high purity product with major ESG benefits. We need to use technology to do that. And in the process, we create an independent, new, clean producer at scale.
Great. Okay, thank you very much, guys. Great presentation. Direct lithium extraction, you mentioned that, and sometimes, saying new technology scares investors, but this really isn't new technology. This is ion exchange.
You've got it. And the thing that we struggle sometimes to communicate is that, as you know, Dave, ion exchange has been used for 70 years in water treatment. You just design a bead to take out the metal that you need to remove. If that's lithium, if that's zinc, if that's lead or whatever. And what Lilac has done is they've designed a bead that's highly selective, just to take the lithium out, and it lasts a long time. And they're the two key things that you need when you're running ion exchange for whatever metal you want to extract.
Yeah. Half of the world's uranium uses ion exchange. So got a question about the export credit agencies. Raising debt at 2% for development is really unusual. Maybe you can elaborate a little bit on the true benefit of your debt arrangement and whether you believe the market's caught on this.
So first of all, export credit agencies have been set up. They were actually primarily set up back in the Spanish flu after the First World War to assist development in other countries. And so the idea is to send both the equipment and the expertise and design work from that country of origin to where the project is. Around the world at the moment, governments want to be seen to be participating in this whole energy transition. And we're just a fortunate beneficiary. And because we have meaningful ESG benefits, that's even better. So we were fortunate in that we specifically went out and targeted it, because not only does it provide long-term debt, but it ameliorates the perceived risk of operating in Argentina, and it puts this quasi-government seal of approval. So having two sovereign states co-investing alongside us really makes the project much more robust and de-risks it from an equity perspective.
Right. Okay. Thank you. And we're pretty much up on time, but I just want to get one more question in. Your ESIA, is that dependent on the pilot plant being on site? And how long do you believe it'll take to be being approved after completed?
So the environmental social impact assessment is being headed up by Knight Pearsold, where the DFS is by Hatch. And they're looking at all the usual flora and fauna impacts, water impacts, social impacts. So it's not dependent on the demonstration plant per se. The demonstration plant is good because An equity investor and a debt investor can come on site and they can see and touch it. We get additional information for our front-end engineering, but best of all, we produce 2.5 tons of product. So instead of kilo samples, we can send half-ton samples for qualification testing with downstream off-takers.
Okay, great. Well, thank you very much, Steve and Stu, for speaking today. And beyond, on behalf of everybody here at Red Cloud Securities and Red Cloud Financial Services, I want to thank all viewers that have joined us over the past 3 days.